Recent economic data from the UK has fueled speculation that the Bank of England is starting to consider pausing interest rate hikes. You can see here the GDP data midweek for the UK came in below markets' minimum expectations, and Bloomberg report that the UK economy has shrunk at its quickest pace in 7 months in July. So it certainly was a surprise to the downside. Furthermore, on top of this, we've had some recent speeches from Monetary Policy Committee members adding fuel to the speculation of a Bank of England pause, with Governor Bailey saying that monetary policy is much nearer now to the top of the cycle. Cunliffe pointed to mixed signals about the economy, and dovish Dhingra, which isn't a surprise, said that the policy is already sufficiently restrictive, and she's obviously consistently voted to hold rates steady. So short-term interest rate markets have rapidly reduced expectations for Bank of England rate hikes. A few weeks ago, this was as high as 6%. We now see expectations of around 5.55% for the UK's terminal rate. Now, if you look at expectations for the meeting coming up on the 21st of September, next Thursday, we can see that short-term interest rate markets only now see a 67% chance of a 25 basis point hike next week and a 33% chance of a hold. So this does mean some of the recent pound strength is starting to unwind on this more dovish expectation. So with pound weakness potentially ahead, this seasonal weak period for the pound dollar is quite noticeable and potentially significant. Over the last 15 years, between the 20th of September and the 9th of October, the pound-dollar pair has fallen over 85% of the time, for an average fall of 1.75%. So with the Federal Reserve meeting on September the 20th, could a hawkish message from then send the pound-dollar sharply lower? It is certainly something worth looking out for. Major trade risks. All outlooks have risks, and of course this is no exception. The major trade risk here would be either an improvement in the UK's economy, a rise in the inflation data in the UK. You can see here in the G20 that the UK's inflation data is some of the highest, particularly out of major central banks. And the other risk, of course, is if the Federal Reserve has a more dovish meeting next Wednesday. Remember, don't just trade it, seize an exit.